Hi, everybody. I'm Diane Brady. I'm here with Michael Del Castillo, Senior Editor in charge of all things crypto, blockchain, and more.
And more.
You are bigger than just your beat,
Increasingly,
Michael.
I'm describing myself as a decentralized systems reporter, which has much less flair to it. But I think
like
it
thought
feels
leader.
More...
I aspire to thought
all
leader.
right.
But we're talking about the regulatory environment. And the hero or villain of the moment, depending on where you sit, Gary Gensler, the SEC chair.
Yes.
Tell us what's going on.
So, Chair Gary Gensler, longtime Democratic regulator, he worked with both the Obama and now the Biden administrations, was thought to be a crypto supporter. Or let's put it this way, crypto folks loved to write headlines that made it appear that Gary was a crypto supporter. Mm-hmm. And
because he was sort of a live and let live?
Something like that. Yeah, but there was also some stuff that he was saying about the role of regulators to be supportive of innovation. And it was said like in the same breath as he would mention something about crypto, and people would connect those dots. And when he came on board, there was some like cautious optimism that this was going to be really good for crypto. But that's not been the case. And we're starting to see a little bit more clearly exactly how that's not being the case as we're learning more about his other regulatory moves.
Right. He has a pretty bold, ambitious plan that spans ESG, kind of the infrastructure of the stock market itself, crypto being one part of the equation.
Yeah. I would break it down into at least three categories, though I think there's probably more. ESG, specifically as far as like demanding compliance of publicly traded companies, as far as their transparency goes. Market infrastructure, so the way that stock exchanges and the countless middlemen around stock exchanges are required to do business and report what they do, and then crypto. And if you look at crypto in isolation, you see what appears to be a policy of sort of live and let live, as you put it, where in the 1930s, the SEC put together a bunch of what we are increasingly starting to be forced to think of as sacrosanct regulations. It's been 90 years.
It's almost like the Constitution, isn't it? What would the founding fathers have said?
The 1933 SEC regulations are a lot like the Constitution for some people. Like, they have not changed. There's been very little sort of addendums and amendments, and what we got in the 30s, we still have today, and especially as relates to the definition of securities and commodities. This is, of course, incredibly important for the SEC because the way that those things are defined can impact whether or not they are the regulator of choice, or the CFTC is a regulator, or some self-regulatory organization.
What is the preference? Is the preference among most? We're talking about it's just like the Bitcoin, Ethereum debate. Would most people in the crypto space prefer that it be classified as an equity or be classified as a commodity?
I would say almost everybody wants at least some crypto token to be classified as a commodity. There's a much lighter regulation when it comes to trading with commodities. You think of other commodities, you're thinking of coffee, you're thinking of
pork bellies.
Pork bellies, stuff that's kind of easy to wrap your head around, stuff that you can touch, stuff that you can feel, and the regulations are lighter there. Securities, where you are basically investing in somebody else with the expectation of reaping some sort of financial reward based on their work, is much more complicated. And the upside might actually be higher over the long haul. Like the securities industry is incredibly desirable space to be if you're trying to monetize it. But those extra regulations also make the barrier to entry a lot higher. So I think that most crypto folks would not want to see their asset classified as a security. But there's some caveats there. So-called Bitcoin maximalists, the people that think Bitcoin is the first and only cryptocurrency, and they don't even like to call it a cryptocurrency. Everything else is a crypto. And they are sort of like the overseers of the only real cryptocurrency, Bitcoin. And I think Bitcoiners would love for everything else to be classified as a security. Because if all of their competitors are classified as securities, and to reframe that, if
it's like Highlander, there can be only one.
Yeah,
Bitcoin is your only commodity
the
option.
Bitcoin maxis sort of have that there can be only one mentality.
Well, let me ask about Gensler for a second, because he is not the only player in the room. Like, if we're talking about this division, there's also the Commodities and Futures Trading Commission. So are they all of the same mind on this, or is Gensler really leading the charge? People are looking to him to kind of set the standard.
They are definitely not all of the same mind, and it's really interesting. So I do think it's worth starting off just by saying that there is a sort of generally accepted practice that the SEC is the more important regulator.
Right.
Like, if the SEC, ends up going to fight for this and decides that something is a security, regardless of what the CFTC might argue, the chances are very good that what the CFTC says is what's going to go. But that's not to say that it's
some are more equal than others.
Yeah, right. Exactly. The CFTC is very active in this. They believe that many more cryptocurrencies are commodities than the SEC has ever indicated. As of right now, I think the only asset that has that sort of safer distinction is Bitcoin. An SEC regulator said on stage in an informal way that Ethereum was also a commodity, but there's now a lot of wiggle room on that claim.
Random rhetoric on stage
exactly.
does not for policy make. Well, what put us in the moment right now, because I know there's a lot that's currently under consideration. Where do we stand at the moment? We're talking about, here we are in April 2023. That's not the only debate as to where things fall. Like, the repercussions are also interesting in terms of what's being proposed.
This is where we start to see we start to learn a little bit about the implementation of these regulations as we start looking beyond crypto. But before we get to that, just really quick, I want to, as far as like a look to the future and what's happening right now, last year, the SEC came out with a case against an individual, actually two individuals, pertaining to their alleged trading of securities using Coinbase. Coinbase was not directly cited as a defendant here, and not indirectly either.
But the platform
was used.
Right.
And 9 cryptocurrencies were listed that these two people had participated in insider trading with. Now, what's interesting about that is neither Coinbase has a chance to defend itself, nor any of the creators of these 9 cryptocurrencies.
Because the assumption is, in essence, you're now in equity.
By the SEC alleging that these 9 cryptocurrencies were used in insider trading, they are implying that they are securities.
Right.
Without actually going after any of the creators of those securities as creating an unregistered security, or without going after Coinbase being an unregistered exchange. What they did is they went after these two individuals and just kind of let those little details kind of lay in between the cracks there. So the CFTC almost immediately responded to this. They saw it as strong arming. They saw it as the SEC overreaching. These 9
squatting on
cryptocurrency
their
creators.
domain. Yeah.
And so the CFTC immediately responded, saying that it was enforcement by regulation. They strongly indicated that they believed they had some oversight over at least some of those assets. And
so is that still a fierce battle between those two has that part been resolved?
I think behind the scenes, yes, almost certainly. I think in public, these regulators don't like the perception that they are squabbling. We've seen some limited statements come out. We are sort of left to kind of deduce what's going on at these meetings behind the scenes. But the CFTC was very active in defining Bitcoin as a commodity in those early days. And in fact, they were the ones who sort of like took the initiative by releasing statements saying that Bitcoin was a commodity. That wasn't like something from the SEC.
Well, this is almost existential,
Yeah.
To a certain extent.
Yes, definitely.
So you talk to a lot of people. So let's get this part, level set. Realistically, what is likely to happen? Because it seems like the case for these to be commodities is, from where I sit, has been perceived as weaker than the case for it to be a security.
I think that's probably...
Is that fair to say? This is like my layperson.
Weaker.
There's a more compelling argument given the risk structure, given the trading structure, given the expectations of buyers, that it would likely fall under SEC jurisdiction.
I think that that's accurate.
Okay.
I'm going to get in trouble for saying that. I do believe that there is plenty of room for a third classification. I think that the 90-year-old regulations that define a security, and therefore indirectly, I suppose, define a commodity, were fine up until the creation of Bitcoin. And I think that there are other blockchains since then that sort of give strong evidence for the possible need of a third category.
And ergo a third regulatory body?
Oh, now that's a fabulous question. I haven't thought that
because
who
would regulate that third category?
Yeah, I think that's a little bit of the fight that's going on right now.
Okay.
There have bbeen jurisdictions elsewhere around the world that have gone for that alternate regulatory environment. I don't know if I doubt the United States would ever do that. But that issue, is there a third asset? Is crypto fundamentally something different? I think is what these folks are fighting to sort of establish.
So let's talk about Gensler, because I think he is a powerful figure. I'm much more familiar with him in the context of ESG, which has, by the way, moved at a pretty glacial pace in terms of when it's proposed to people waiting to see something, get some clarity. What is the thinking right now? And let's say... they've moved ahead. They've already classified some things as securities. So what's likely to happen? Is this just likely to play out as test cases in essence versus some rule from the mount coming down?
Specifically with ESG, or are you talking about...
Let's stay in the realm of crypto right now. This debate about where the classification is one that will continue regardless of what decisions are made. Let's say that it... if we were to talk as to what's likely to happen this year, what's the buzz that you're hearing? Because all these companies have to prepare for what's likely coming down the pipe.
It's a big question. There's two main ways that I can see it going forward. The first is that all of the annoyed people, all of the anger, all of the frustration, all of the companies who are picking up shop and moving to Europe or Latin America or Africa.
Europe being less regulated in environment?
More clear.
Okay.
More clear. That's what they want. That's the end game, right? Like it's entirely possible that Gensler and his colleagues at the SEC aren't interested in making them happy. They don't want the clarity because they don't want the work done here. It's important to note that one of the United States' biggest competitors, China, has banned crypto altogether. They have decided that it is not in the Chinese government's national interest to have crypto traded by their people. They just banned it.
It's interesting given the genesis of crypto as being not anarchist, but a little bit. Regulation was not your friend. That's part of the value. There's no central bank. So in a way, it's kind of ironic to be sitting on our hands waiting to see what the regulator's going to say.
Incredibly ironic. I always like to say that Bitcoin was the first fintech that was adopted by the retail investor first,
Mm-hmm.
and it slowly moved up the totem pole until it finally got institutional.
How important is it to have a regulatory regime here? I mean, are we losing out if everybody's going to Europe and these other markets? It may be good for the Gary Genslers of the world. How is it for the actual kind of economy, innovation, et cetera here?
Another fabulous question. I like to think that the so-called free market of competing currencies is good for every currency, including the US dollar.
Mm-hmm.
And that having assets that look a little bit like a currency, a little bit like a commodity, but also look a little bit like a security, and force stock exchanges to look at their belly button a little bit and figure out how they can improve their business, and force the Fed to look at its belly button a little bit and see how it can improve its business, is a net positive for an economy. That I like to think that competition makes everybody stronger. But there's definitely reason for concern, and I think that the Chinese government's decision to ban crypto, that these tax-supported governments are increasingly concerned about their ability to do business as usual in a world where paying taxes and doing other regulatory compliant actions is more of a choice. I think
capital's global.
Yeah.
Boundaryless. One of the natures of looking at your belly button or navel gazing is that it also implies that you're oblivious to what's going on around you. It can be a negative, right? So I want to return to that idea as to this broader ecosystem, especially where the economy is right now. So much has been politicized, that how much is this a Democrat v. Republican debate versus a regulation, commodity versus securities debate?
It's interesting here because in the States especially, we have a long tradition of associating Democrats with progressives and associating Republicans with conservatives.
Mm-hmm.
To reframe that, associating Democrats with people that are open to new changes, new ideas, new ways of doing things, and
regulation.
And Republicans who are into what works now. They want to keep the good going.
Mm-hmm.
They're the conservative mentality. It's like, let's hold on to what works. And
but
I
small
think that
government versus big government too.
We're seeing that flip a little bit here,
okay.
Right? So I think the Democrats, who are often associated with being progressive, are increasingly looking very against crypto.
Mm-hmm.
They're looking very against this innovation in a way that's, at first glance, I think maybe a little surprising to a party that likes to identify as being progressive. Is it because the little
guy is the one getting burned usually in these situations?
I am maybe speaking a little bit out of line here, but my guts,
sources tell you.
Yeah.
Right.
Sources say, my gut, I'll be honest, my gut here is that the tax thing, which is often a priority for Democrats, they're known, as the party of taxes in a lot of ways, is something that is concerning them. And I think that, the ability to opt into paying your taxes in crypto is a lot easier than the ability to opt into paying your taxes with the US dollar. And I can only imagine that's concerning for a lot of the Democrats. Now, the Republicans, which are often, not always, but often associated with conservatives, with holding on to what's good and, protecting it are very into this technology. And I think that at very least, one of the reasons why I think the Republicans and a lot of traditional conservative voters are into crypto is because of their distrust of central banks.
It makes sense.
Yeah.
That's certainly been the way the Republican Party's been going. Let's bring this down to a tactical level.
Yes.
Different rules that I shall now put on. One being rule number one, retail investor. Yeah. Right? Maybe I have my Coinbase account. I'm I'm starting to see some movement in the right direction or whatever. What can or should I do? Should I care at this point? Does it matter to me, like, whether Gary Gensler says it's a secure? I mean, what's your advice there, or what tactically should they be thinking about?
I think every retail investor in America needs to be paying attention to this. I really do. Like I said already,
because it'll impact how you invest in your potential returns. Why?
I think the muscle memory that is formed as a result of the way this whole process plays out is eventually going to have spillover effect into other areas. Mm-hmm. It's not to say there's going to be any direct connection between the decision whether or not Bitcoin is a security or a commodity, or Ethereum or XRP or any of these others are. But the muscle memory that is developed there, I think, is eventually going to have layout. And mm-hmm. So to answer one of your earlier questions about what might we expect this year, it's very unlikely / almost zero chance we see any new regulations from the SEC. In 2019, though, we did get some interesting guidance, so-called, of how they would like the crypto developers to interpret and use the existing regulations. I think that there's almost no stretch of the imagination where that guidance is considered sufficient.
Did people take the guidance and use it?
Well, some of it was like, come talk to us and we'll tell you. And instead of the SEC being helpful in instances where people have come to talk to them,
don't ask forgiveness, ask permission.
Yeah, a lot of people have gotten in trouble. And the lesson learned is, if you do go talk to the SEC, you might get a hand slap down the road. So I think there's a decent chance that sometime in the next year, maybe 2 years, there is some more guidance, mm-hmm. a little more clarity into how to interpret this. That
sounds like a recipe for people to leave. If clarity is what people want, that is not clarity.
Yeah, I think that there are actual regulatory changes, like we talked a bit about mm-hmm. Europe, that are in the process of being implemented, or in elsewhere around the world already implemented, that are legitimate bona fide clarity, and those jurisdictions are going to be on the receiving end of any ambiguity that remains here in the States. But I think the retail investor also needs to be paying attention because of Gensler's work in other regulatory areas. So mm-hmm. he's really gotten a lot of attention for his work in crypto, or his lack thereof work in crypto, his enforcement in crypto. But his
he's support for 90-plus-year-old regulations, right?
Yeah, and I think that he, like pretty much every SEC chair in history I can only imagine, wants to make his mark. And making your mark in crypto by enforcing 90-year-old regulations isn't necessarily sort of like the progressive perception mm-hmm. that a chair might want to have. Mm-hmm. He is doing the exact opposite in pretty much every other area. So when it comes to ESG, he's getting very, very aggressive about requiring that companies that benefit from the American publicly traded system are held to higher standards as far as their reporting around ESG, environmental and sustainable investing opportunities. And the potential added cost of compliance as a result of being deemed an ESG and having to be more transparent with your investors, regulators, could actually be seen as a discourager of ESG investing opportunities mm-hmm. by having that extra threshold mm-hmm. there. And then on the other side, he's not only aggressively going at changing the way that we deal with ESG, but he's very aggressively going after traditional market infrastructure. Yeah. And
it's a complete overhaul, basically.
Yeah. In December they proposed, I think it was 3 regulatory changes many of which are a direct result of the so-called meme stock trades that were happening.
Just the GameStop and the Best Buys
exactly.
of the world. Right.
These were stocks that big institutional investors had shorted, and small little retail investors liked them because, in the case of GameStop, they like to play video games, and they didn't like that their favorite video game store was going down, and they bought up the price of these stocks, causing huge losses for the institutional investors that had bet against those stocks.
Right.
And it seems pretty likely that new phenomenon of retail investors acting like institutional investors in the way that they were manipulating market prices, and creating the impression of a short or a long, was at least one factor in deciding to propose these new regulatory changes. Right. Now, I was
former
just talking,
Goldman guy, that being Gary Gensler, does not like retail investors to act in concert like institutional investors. It's hard to
say. I don't want. Yes, that was my first instinct, but I will say I'm talking with a lot of sources out there that say that's actually not the way it's playing out.
Okay.
That the Citadels of the world, the Virtues of the world, a lot of these other organizations that were really harmed by the GameStop, the GameStop meme stock trend, are actually also not very excited about these changes.
Okay.
And I think that what really needs to happen is a more nuanced look at each of the regulations individually. And along those lines, Friday, an unofficial, somewhat official deadline passed for comments for people that wanted to make their opinions heard about these proposed regulatory changes. There's usually a little bit of leeway there, which is to say that anybody who sees this and goes and actually looks into the proposals and reads them, I think that there's still comments being received. So, while we have on the one front an implementation of regulation that is enforcement of 90-year-old regulations
on the crypto front,
and a rather staunch refusal to make any changes, is contrasted heavily with the way that Gensler and the SEC is dealing with other areas. And for those that want to sort of have a say in that, especially retail investors that I think are heavily impacted on the crypto side, and I think triggered the changes on the non-crypto side, should be paying very close attention.
Let me ask one other question, if you don't mind, back to the crypto, which is, let's say you move to a regulatory regime like Europe or wherever else. The most liquid, vibrant market for the use of these assets remains the U.S. Would you still be beholden to some extent to the U.S. law? I mean, you cannot exit. Nobody wants to exit the market in terms of the opportunity here.
That's a tough one. I think there would have to be a couple theoreticals applied to sort of give any strong answer to that question. I think the first one, what would happen if the U.S. did in fact determine that all of these were securities? Bitcoin was a security, Ethereum was a security. I think we would continue to see institutional use. These giant institutions that do billions of dollars of business and see trillions of dollars of volume move, the cost difference between complying with one regulation over another is relatively negligible. It's not cheap, but it's relatively negligible compared to the cost difference of a retail trader that has no compliance ability built in when faced with a decision that would ban or that would turn all of this into a security. So I think that we would, institutions, I think, would actually continue to do it. If you look at what CME Group is doing with their futures trading, it's pretty obvious when you look at the users there that those institutions probably would keep doing business. They're already complying, right? But yes, I think a lot of the retail business would be driven elsewhere. And I feel a little bit like a broken record, though it's not necessarily me that says this, but a lot of people you hear say over and over again, this is great for developing world. This is great for the developing world. This is great for the developing world. And it's not actually proved to be a huge point of adoption. To your point, the U.S. market is still the most liquid.
ESG, by the way.
Yeah.
There's a history.
But I just had a phone call with a taxi driver in El Salvador that just bought his 9th car for his fleet of taxis, doing drives that are only paid for in Bitcoin.
El Salvador famously going all in on Bitcoin.
Yes. And what's interesting about that, you hear all this talk about the fluctuation of the price and how it makes it bad to spend. The fluctuation of the price, how it makes it bad to spend. The same can be said for any currency, especially if you're trading it market to market. Those price fluctuations are incredibly catastrophic or incredibly helpful if you're trading dollars against pesos. Or,
may the wind
be
at your back.
Exactly. But, as we know in the States, we never think about the price of the dollar relative to another currency when we're buying bread. And same can be said for countries, even in, with hyperinflated currencies, like they take the cash out, they pay it, they go home, and, they go on with their lives. What's interesting that's happening in El Salvador, they're not thinking of their adoption of Bitcoin as an investment opportunity. They don't care how much it's worth relative to the dollar. They don't care how much it's worth relative to another cryptocurrency or another fiat currency. They are only doing business in Bitcoin. And they're not adjusting their prices on a day-to-day, minute-to-minute basis to reflect those changes relative to another asset. And it was really eye-opening for me to talk to this taxi driver who had just bought his 9th car, had 8 employees, was only accepting Bitcoin, who didn't really care about that.
That's interesting.
That fluctuation. So it's a long way of saying I'm actually starting to open my eyes up a little bit to some of these claims that the developing world might actually still be a right place for adoption if the regulatory environments in the so-called developed world decides to take a position that stops that.
Interesting. Well, all the more reason to keep an eye on Gary Gensler.
Oh, definitely.
Thanks for joining us.
Thanks for having me.